All right. Okay. All right, so it's probably a quick one, guys. Again, we've kind of reiterated the kind of do nothing stance for the past few weeks. And given that there's only 5 of us in here, it seems like most people don't really want to trade this week, which is understandable. Giving kind of a broad market outlook, looking at the small caps first, it seems like they're kind of giving us the hint of what the bigger, mid and large caps want to kind of follow and what's going to happen. So we can see with the mid caps with the small caps, we saw this breakout. Everything looked amazing, but we quickly faded that move. We're now back into the relevant range it's been in for the past year. And we're seeing like, the mid caps that are still not into as much of the range as the small caps. And again, the SPY only 5% off its relevant high. So looking at the small caps, it's like they're kind of in first place of the pullback compared to these other, larger capitalized, sectors where we could expect a little bit more of a pull in the mid caps. And given that we're only really 5% off all-time highs, as much as we really want this 450 to hold, it's kind of hard to really expect that. Really, if we came into 420, that would be a technical correction. That'd be a 10% pullback off highs and would put us in a really, actually a very good trading range to trade in, or we could be looking to buy up through 420 into 470 and looking to, take profits into that in this next first retest. So again, most names, again, we kind of go over this in the big picture and shakedown, not a lot going on, but there is still a few. For myself personally, again, I don't really have any orders in, but I will be keeping an eye on this MMC. This is a name I've been in, since March. It continues to flag and move higher. So I'll look for a potential add up through this 172 in time. HSY, another textbook full flag that's been forming up to this 182, and we can see these higher pivot lows that have been forming every couple of weeks, so we can just kind of continue to limit that risk when that name's ready to go. Zebra is another one, nice flag up here that's forming, probably going to take a little bit, I'd like to see it consolidate a little bit longer than these few weeks, but this is one that if and when the market wants to turn and this name's flagging at highs, probably is going to be one of the first ones to go. Then a name like MELI that's down almost 50% off its high, this isn't going to get as much love as the names that are looking much stronger. A few other ones, we have this box, little earnings flag. Again, I would expect this 25 to kind of get smoked to the downside before any potential move up through 27, but I'm only focused or keep an eye on that move up through 27 when that time comes. Other macro charts, we have this TXN, just again, name that's flagging near highs. We can see it kind of catching up to the 200 acting as support. So one to kind of keep a radar in this 197-200 area. Hasbro and Mattel, a couple toy companies, both kind of doing the same thing, flagging near their relevant highs. Mattel is just a cheaper name that it's not going to type up, but both setting up. We have this CTSH through 82. That's looking pretty good versus 76. Again, the 200-day still acting as support, where we can see here, in months past, the 200-day was acting as resistance for the most part. And we can see it now, it's starting to act as support, giving us a bit of tighter entry. And those are, again, that's all I'm really looking at for the week ahead. And if anyone else has anything else they want to go over, we can go over those now, and then we can go over any of the ideas in the chat.
Hey, Ben, it's Joe.
Hey, Joe, how's it going?
Good. Kind of some of the things that I'm looking at. I noticed that BLDR is definitely working towards the next leg of its run up. That little flag there. Love to see it a little bit tighter. Right now, I've got 74.61 versus 69.99. So, $4 of risk. Would love to see that tighten up some more. So I'm definitely keeping an eye on that. Also, ACI, Albertsons, this one and Kroger's, definitely been two names that have been, staying strong with what we have going on. So, keeping an eye on that as well. I know I posted a bunch of names, but just some names that I noticed that were flagging and whatnot, still staying kind of strong. So a lot of watching this week. Definitely working on patience. Also, one of the things that I know I've done poorly in the past is buying a breakout on low volume. So trying to watch the volume for things that are breaking out is something I definitely need to start working on, as opposed to, it went through the level and I'm going to buy it. Because normally when that happens, it turns out no bueno, because it comes right back down. So.
Mm-hmm. And even though what you said, there's actually one more chart that gives a good example of this. And this is this CHRT. And again, we talk about the base, the 4 stages. We have the base, the breakout, the topping pattern, and the breakdown. And this gives like a perfect, visual repetition of this. We see the base, we see the breakout, it looks amazing. It then starts to break down. And this is like, I feel like the last week and probably even going to be this next week ahead, where we're still kind of in this range. And this was a mistake that I made going back to the pandemic, where I was starting to put risk on. When I was sitting in cash, I started to buy heavily right here. And I was just it looked amazing, relative to the pull that it had.
Training.
But it was just, I was still way too early. And that's, let's see. It's going to mute whoever that is. Okay. So I just got in a little bit too early, like looking at this amazing deal. And again, the market dropped just as farther, even faster. And that's kind of what we're seeing right now, where a lot of things look really, they look like these great deals. Even this, MELI, it's like it's down 50% off its all-time high. It's a very expensive name. This isn't a name that's going to drop down to $100 and be 90% off highs, where this might be the time where it looks like, I can buy it at 1,000, maybe make 100% in a few months. But in reality, it's probably going to go to 700 before it's going to have any bit of a bottom. And that's just something that we want to be aware of when we start to see some of these deals, that we really want to start to see the names that we're looking at start to form a base. As much as it's like exciting to try to buy the low or catch the low, very rarely do we ever get them. And when we do get them, we quickly give them away because we're just immediately in the money, and it's very hard to sit with those winners. So I think the main thing is when we start to find these names, the names that we like a lot, and they look affordable, we want to let them consolidate, let them base out, because very rarely do we get these very sharp V bottoms off lows when names drop this much. So it's just something to just kind of keep aware of, going along with kind of being patient and things you were mentioning.
So Ben, if I'm understanding you, on the way down as we hit the bottom, we're always still looking for the setup, not just to say it's 50% off of lowest, so I'm going to buy it. Well, what's the setup there? So, and then we're buying off the setup instead of just, that's as low as it's going to go.
Exactly. Yeah. And that's,
okay.
And it's just, especially now, like, again, the last year or so, we've been focusing on these support buybacks. They've been a very good tool in our toolkit to find opportunities. But right now, when support is getting smoked, we can see those names, like, and even for me, when I was talking about, like, when I started to buy during the pandemic, was the SPY was coming into significant support at that time. And it looked like a very low risk buy. I can buy up through 280, relatively speaking, versus 270. It looks amazing. But then it drops to 200. And, I was never expecting that. And I don't think most either were expecting that same kind of drop. And that's those things when these bigger names are coming into major support, even like Mitch, even though it didn't really get, that smoke through support, but that's kind of that expectation where, okay, it's coming into support. It looks amazing, but eventually it does shake out and it probably still heads lower in the, in the short term. Where for me, for this name, it's like above 136. Like that's when I want to be involved. Like I don't want to try to buy 122 versus 120 or buy 120 and give it arbitrarily versus 100. I'd rather just wait and buy it up through the prior pivot high. So again, it's just more of just sitting, waiting, being patient. And again, the last time that we've had kind of a difficult market in this period, this was a month. This last little pull that we had, this was the month that the market was crappy, and then we got almost 2 months of a very easy and good market. So if we can give the market that same time, let it sit in timeout for the next 2-3 weeks, and just wait for this little base to start to form again, then we can put risk on with much more confidence than hoping to 450 holds when more likely it's not going to hold.
Gotcha.
if that makes sense.
It does. It does.
All right. So let's see. I see
Thank
Tim
you.
mentioned it. Yeah, of course. I see Tim mentioned a few in the chat. He has a CNP up through 27. Again, it looks great, just tough to buy it. Like it, it's a couple cents away today. Again, a lot of the utility names are going to be going in, and this is, it's actually good, Tim, you mentioned this. Again, as everyone rushes to the safest sector, which is going to be utilities, this will be a very good clue for us for when the market is going to start to settle. And as if when the CNPs, and all these utilities do start to break out. So we get, a 3 or 4 day move in these utilities and say CNP is at, 28, 29, and it looks amazing. And that's when everyone is now rushed into utilities. The fear is at its highest. Everyone's going to rush out of everything else that they, the higher risk stuff. That's probably going to be close to the time when it'll probably be the time for us to get big in. So utilities will be a good thing to keep an eye on of when, they can break out. And that's going to be kind of that sign of we're getting kind of near the end of it. But it'll be tough to buy this CNP up through 27, versus, 25.50, when utilities are going to be a lower beta name. And like best case scenario, this thing is going to go about $1 or so. So it's like the risk reward is only going to be like 1-to-1 in this name. A few others he had, we had Fang up through 116, which looks great. Again, the energy names, have been on quite, the best performing sector this year, again, because they were the worst last year. So just percentage wise, the move off lows is just much more, amplified for those names. So again, Fang up through 116, probably the best energy name chart wise that's out there. Definitely looks good. MRVI up through 46. So definitely see what you're looking at there. Just going to, more than likely need some time. And if you do get in this one, it's like the next spot you want to add up through 50. And of course, the goal would be to hold for that retest. But again, that could take months. And lastly, he had was a CIEN. Again, looks great. Earnings flag. I guess earnings are coming up on the 9th. So we want to wait until that's out of its way. But chart wise, couldn't ask for a better chart, especially given how the market's been trading. So these are those names, like names that are flagging at highs. Like I would much, any day would rather risk $2 buying this thing through all-time highs than trying to buy a name that is, kind of pulling into support, like a Mitch. So this is probably the best one I think that's been mentioned so far. Let's see, Zach, looking at car. All right. So the only thing is just when you see like a candle like this, again, I guess this was on earnings, but you have like these big days, it's just hard to expect. And of course, we all want it to come back to this price. But in reality, when you think of like even like the GMEs and those names, when they have those insane, parabolic moves, even though it's just a little bit different of a situation, very rarely do they get back to those highs as much as we think they're going to. So this might be a little bit, if you're trading the range here and you're trading it relative to, in this range, 250 versus 320, which is, a big enough range to trade this. I can definitely see, buying up through 280 and looking to sell into 320 and things like that. But if your expectation is it getting back up to here in the short term, probably not very likely. And then a couple that Jake mentioned, I know that the QDEL was, chart of the week or trade of the week. And this is, again, we're talking about like that. We're talking about waiting for the base. So this is kind of like the market at the moment, like the little pull in, maybe it's got to pull in more. And as much as we want to try to get in, trying to buy here, waiting for this base to develop often is much, a much higher probability. And now that it's getting tighter and tighter, this looks like, again, another very good trade to buy up through that, kind of base breakout for that eventual move back into these, higher 220, 240, 260 area. So yeah, definitely keep an eye on that. You mentioned AbbVie as well. It goes up to that 120 area versus that 115. Just switch these around. But same thing. The only tricky part is, again, we're going to have to deal with that retest, this 122. But after that, then, it's blue skies for this name. Let's see, last PLBY. Watching PLV. Okay. Yes, I definitely have to just give this one some time. I'm not really seeing anything crazy yet. I mean, up to 44, but again, 44 versus 32 is just a little too wide. Yeah. All right. All right, guys. Anyone else want to go over anything else other than me talking to myself this whole time?
You've been doing a great job.
Evan, how's DR?
Oh, it's beautiful, my friend. I'm so glad I'm not in front of a screen staring at charts. I'm not going to lie. It's a lot better over here. Look at this. Come on. Charts? I don't need those. No, I'm kidding. I'm still scanning even while I'm here. But yeah, I mean, I posted a message last night, saying like, to me right now, I think there's no reason to be putting on risk. The volatility is just so, from my experience in the couple of years that I've been doing this, I have zero edge here. So I'd rather just be hands off, keeping my eye on the relative strength, but mostly just hanging out, getting a tan. And that way I'll be looking fresh and physically and mentally for when things pick back up. If you look at the S&P and you look at the action that we did like mid-October to mid-November, that's the action I want to be a part of. I want to see that slow grind every day, gapping up, holding the gap up, not too much volatility. Those are when I do the best. And being able to figure that out took several years of trying and failing at different seasons of trading. And it's really starting to click now. And I think that's a big part of it. I always I repeat to myself now, it's like, if you can take out the 2 or 3 of your worst months in the year, you probably double in your profits over that year, So trying to avoid those crappy times is key for me.
Definitely agree. Love it. You sent some beach picks. I think we kind of wrapped it up here. Again, for you guys, especially for the guys who have other sources of income, this is like an amazing time to do anything else other than looking at the market all day long. It's just going to try to, trick you into doing something. So if you have anything else that can bring in some money, focus on that for probably the next week or so. And we'll just kind of keep reassessing and seeing when it'll be safer to kind of start dipping our toes back in. So you guys have a good week, and I'll talk to you guys in the chat.
Yes, sir. See you guys.
Have a great day.
Thank you.
Peace.